Welcome back to the Dividend Diplomats YouTube channel, guys. You've got your favorite dividend investors out here who've been in the game for as long as possible, who've been, on our website blogging for, gosh damn, almost 11 years, who have been on YouTube for close to 4 to 5 years, guys. And let's have a talk about why dividend investing can set you free.
Smash that subscribe button, everybody. Give this video a thumbs up. It's Sunday morning. We're going to have a Diplomats fireside chat today. Talk about the why. We're going to bring the why into the equation. We're always talking about stocks. We're always talking about ways to grow our passive income. But this will be a fun to peel back the mind a little bit and see some of the thought process for what got us hooked on this in the first place.
Exactly. And, it all starts with, like Bert, why dividend investing for you?
Well,
What is your ultimate goal?
I mean, obviously the goal is to build that passive income stream, build that growing passive income stream that takes care of itself. You set it, forget it. You don't really have to put much effort into it because those dividend checks come in without lifting a finger. You can supplement your income, watch it grow so that one day you can retire off of it.
Yep. And Bert, you've been in the game 12, 13 plus years. I've been in the game 14, 15 plus years.
Mm-hmm.
And, again, Bert, myself, and probably a lot of viewers out there, and hopefully maybe some new viewers, we all have aspirations to save money. You're going to your 9 to 5, or your 8 to 6, or your 7 to 7, or your 70-hour a week job, or your third shift, and you're doing it because you're either trying to make commitments or you have dreams,
Mm-hmm.
and ultimately you want to save dollars to acquire something, and whether that's real estate, whether that's a car, whether that's food, whether that's rent, whether that's mortgage, but also it could be assets,
Mm-hmm.
assets like real estate, assets like stocks. And, if you're at that level here, you know, you want to learn how to invest appropriately. And, here on this channel, you'll find out that we do talk a lot about dividend stocks. Again, we're the dividend diplomats. Bert and I both are dividend investing, trying to get to financial freedom, trying to get the passive income to be greater than the current source of income, or at least cover expenses. That's the goal there.
Yeah. And that is done by buying those income producing assets here. And to your point, Lanny, you save, you look to invest, and you look to grow. And each one of the pieces you mentioned have different levels of risk, have different levels of effort that have to go into it. Some areas like dividend investing, once you put the heavy liftings on the bot is on the research side, right? Like you spend a lot of the time finding the stock you like. You go through your investment decision, and each person has their own way of determining what stocks they want to invest in. Each philosophy is different. Lanny and I have slightly different takes on dividend investing. Other investors have different takes. You find what works best for you. But once you buy the stock, it's more maintenance mode. Where you have other investments, you have real estate was the one that you mentioned earlier, Lanny. You bring it up. There are other costs that come into it. You might, if you're going to be a landlord, there's more time that goes into it. So there might be a higher payoff in some areas, but there's more time and effort that goes into it.
Yeah, absolutely. And we're not here to say dividend
No,
investing is better than real estate
no,
investing, is better
no.
than growth investing. But we are also here to tell you that dividend investing can be a great form of passive income, guys. Again, income. So, we hear a lot from a lot of people like, why would you buy, a stock that pays you? It's like, well, our goal is to live off of income, not off of hoping a price goes up.
Mm-hmm.
And your income can grow in a few different ways when you're a dividend investor. One, you could acquire more shares of the stock, ETF, or mutual fund that pays you income. Two, companies, ETFs, and mutual funds, as they continue to grow, as they continue to earn more, the goal is that those companies increase the dividend that they pay out to shareholders. And the third other way that your passive income can grow, again, this one is definitely, again, by itself, is through reinvestment of dividends. It's when the dividend gets paid and automatically cycles back in, grabbing more shares. Most brokerages do it for free.
Yes. And that's a really important point. All of those, the dividend increases, dividend growth, Lanny, it happens without effort. It happens without you having to lift a finger. It takes Lanny and I just log into a computer, check on our phone, and see, hey, this company announced a dividend increase. Minimal effort to watch your income stream grow.
Yeah.
And that's what attracts us to it very much.
Yeah, just tonight was a funny example. I laughed because we just came out with the video here on February 27th. One of the stocks was Eaton Corp, and Eaton Corp tonight, by sheer coincidence, announced a 10% dividend increase. So the income that I owned already off of owning shares of Eaton Corp, ETN, the income is now 10% higher. I did research in the beginning to buy the stock, saved, invested into the stock. Now the income is growing every single year from owning the stock.
Yeah, and that's why we keep focusing on our personal strategy is wanting that income. We want to be able to take the cash one day and use it and realize it and put it in there. The one thing when you're going through, like as you mentioned, like your Tesla, some of your other stocks, you could say strategy, you could say, sure, you could say Bitcoin, whatever you're relying on that might not have passive income stream and you're banking on the appreciation, you're kind of leaving yourself up to some of the peaks and valleys that are going to come along with it. The only way you're going to actually realize the value from appreciation is by selling that investment. If you're not planning on selling the investment, you can't, it's not liquid right now. There's no cash available. And sure, you could hit a sell button, but it's not the same as having the ability to turn off the dividend reinvestment and get that cash and transfer it into your cash account. Because that's why you buy those dividend stocks to build that dividend income stream.
Exactly. I mean, it gives you an easier passive income stream because it is income and it's actually taxed
Like,
at a qualified dividend rate, capital gains rate. So, again, if you own a stock and it popped up at 6 months and you sold it, you got short-term capital gains, or hey, you just own the stock that pays you qualified dividends and you pay, max 15%. So there's a lot more benefit to dividend income versus the capital gain from a short-term standpoint. And then again, you're not selling the shares. So your nest egg doesn't disappear. It actually continues to potentially, grow. And that's something that you could easily, again, as part of one of my goals, and I believe one of Bert's goals, is to then you'll be able to pass it on to other generations, guys.
yes, that's absolutely right. That's a huge goal of what we're looking to build here.
The Bert treasure chest.
Yes, that's absolutely right. And I think one thing is it's sometimes like Lanny and I are very comfortable looking at financials. We're very comfortable looking at individual stocks. Other people aren't. And that's what's so beautiful about dividend investing in 2025. The emergence of ETFs that allow you to buy baskets of dividend stocks, find a fund that pays a dividend, pay with a nice dividend growth rate that can help you achieve what you want while getting what you need while growing your income. It's amazing how much ETFs have been there. And I wish they were when we started.
Oh, yeah. I mean,
Like,
you better believe, with the value that SEHD, VYM, DGRO can provide to dividend investors right now is huge because you're getting an appreciating, lower risk basket of stocks that has a great dividend growth rate at or above 3.5%, with a dividend growth rate that is at or above 5, 10, even upwards of 15%. So you create this even easier to manage snowball. So yeah, just a few ETFs we would definitely recommend. SEHD, VYM, DGRO. Again, we recommend VOO and VTI as well because they do provide a lower yield, but you at least get some income from investing there.
yeah, and maybe Lanny, that might be a good video. It might be a long one just to kind of bucket some of these ETFs together. Of do you want the lower yield, higher growth ETFs? Here are five of them. Do you want the SEHD VYM bucket where it's in the 3% range, the moderate growth here, or like the 5% bangers? If you guys would be interested in us putting that together just to have something to refer to, we'd be happy to throw that together.
Yeah, and again, there's a lot of blue chip stocks. We have our top 5 foundation stocks. If you're new out there, Pepsi, J&J, McDonald's, gosh, bro, who else is on the list?
Consolidated
Procter.
Edison. Yeah. So five great stocks that sure aren't the sexiest. We're not going to be like, yes, Con Ed, let me run and just, but like 50 years from now, you're going to be happy that you have Con Ed. 50 years, you're going to be happy you have an electric utility. Same with Pepsi, same with Johnson and Johnson, same with Procter and Mickey D. So great, just great, solid companies that can build generational wealth.
Yeah, exactly, guys. So, again, just really wanted to break down on today's video that, the why behind our dividend investing and maybe to help you find your why on your investing journey, especially if you haven't chosen kind of what you want to do. I would hate for you to just, run a bat and start swinging at everything and then create a portfolio that's a hodgepodge of 70 different stocks that you're like, oh crap, how did this happen?
Hmm.
But sometimes you have to learn. So it's better to make errors and mistakes earlier. So tip my hat off to you guys. I see no problem. Actually, I recommend that as well, just to reshape your portfolio sooner.
Yeah, we said it earlier. It's about finding what works for you. What works for Lanny and I might not work for you. You might be able to learn some from us and want to apply some of that to your strategy, but it's your personal investing strategy and it's your personal finance journey.
It's
So
mine.
it's not yours, Lanny, it's theirs. It's the viewer's personal finance journey.
It's the people.
Yeah. So everyone, let us know. I'm curious, what are your thoughts? I obviously you're watching us because you have some interest
What's
in
your why?
yeah. Share that below. Share us the why. And if you want to, feel free to share a little bit of your strategy. What's your personal flavor to dividend investing? Are you an individual stock person? Are you an ETF person? What's your why? And yeah, we'd love to hear from you.
Yeah. And remember, guys, dividend growth investing can definitely set you free. Buy more shares, dividend increases, dividend and reinvestment, all methods that increase that passive income, guys. So if you like this video, definitely give it a thumbs up, subscribe to this channel. And Bert, let me tell you something, brothers. You're either with us or you're against us, Jack. That was Bert the Hurt and Lanny from the Dividend Diplomats. Over and out.